Hi everyone, this is Dr. Nitin Choda, and in this important episode of Ignition Time, I'm going to talk to you about the significant inequality that exists in the housing market in America. Right now, as I'm recording this, the government and the administration, they're essentially arguing over how the next stimulus relief bill will look like. They're then going to negotiate with the Democrats, and there's a lot of pandering going on back and forth between both sides. And as I type this, the moratorium, the pause, the freeze, if you will, on evictions has in fact expired. So this means that renters across the country are now facing a risk of evictions all throughout the country. And what's absolutely ironic about this is that the housing market is actually seeing a boom throughout the country. This is the irony of life. Ladies and gentlemen, my name is Dr. Nitin Choda. My channel is Ignition Time. If you learned something new from this video, please click like, please click subscribe below, and please enable the notifications button. My goal is to give you important updates about the state of the economy in our country and how you can manage your money and finances going forward. According to Jeff Stein, who's a Washington Post reporter, who is an excellent reporter, according to his Twitter feed, Tammy Stein, a laid-off housekeeper, has been denied unemployment despite applying for unemployment in March. She has applied to countless jobs and is trying to sell hot dogs on the beach. The landlord keeps calling her, and the threat of evictions looms. In fact, if there's no further legislation for the extension of the moratorium eviction, she could probably be homeless. And meanwhile, all this is happening while housing sales boom. That is exactly what's going on right now. In fact, according to an article on the Washington Post, 2020 is a summer of booming home sales and evictions. What an irony. The affluent are taking advantage of the cheapest mortgage rates in history, approximately 50 years, to buy bigger homes. Meanwhile, renters face more job losses and fear eviction. If someone is a homeowner, if someone has a stable job, and if someone has good credit, they can now essentially take advantage of the situation by taking advantage of mortgage rates that are at a 50-year low. Where I live, the threshold for a conforming mortgage, in other words, a non-jumbo mortgage, is $760,000. And what that means is, in my neck of the woods, someone could borrow up to in my neck of the woods. Again, this depends on where you live. This threshold is different across the country. In my neck of the woods, someone can borrow up to $760,000 at 2.99% last time I checked. And if you want to borrow more than that, if someone wants to buy a $2 million, $3 million, $4 million home, the rate is 3.75%. So this means that jumbo mortgages, in other words, jumbo loans, larger loans, which used to be cheaper prior to this pandemic, are now more expensive post-pandemic, which also means that for those individuals who want mortgages for conforming loans from Freddie Fannie, the rates are under 3%, which is a 50-year low. That is incredible. On the other hand, those who are renters are now facing evictions. So think about the inequality in the system. I've done other videos on my channel where I talk about the fact that the system is rigged. Talk of a rigged system, it's unbelievable. In fact, according to this article, one realtor, James Dietsche, I hope I pronounced his last name right, he said there's only one way to describe the real estate market right now. It's insane. So what he said is homes are literally sort of disappearing because people want to buy them very quickly, and Americans with money in the bank are buying bigger homes while renters increasingly worry about eviction. This summer is one of the best times for home buyers and one of the worst for renters across the country. And 12.6 million renters across America said that they were unable to pay rent last month, and nearly 15 million homes sold nationwide in April, May, and June. Home sales are booming because Americans who have savings, who have stable jobs, and good credit scores are taking advantage of the cheapest mortgage rates on record to bargain shop for larger homes. New mortgage applications have now hit a level not seen since 2008 because individuals who have the foundation can now take advantage of these low interest rates. Like the one I mentioned earlier, sales of new homes jumped 20.7% in June in Pennsylvania and 13.8% more recently, according to some expert forecasts. So what this particular realtor Dietsche said is people are literally trying to get back to a house in the suburbs with a yard and a fence. Those are the homes that are, in his words, blown off the market in 2 seconds. So this is from a realtor at House for You Real Estate in Dillsburg, Pennsylvania. By the way, I will link you to to this article in the description below. Definitely worth checking out this article. So the worst downturn since the Great Depression has hit low-income workers who are typically renters the hardest. Remember, the low-income and the middle-income workers, in other words, individuals in hotels, in travel, in entertainment, in leisure, they are the ones who've been impacted the most. These are the individuals for whom the $600 a week federal booster, which essentially has gone away right now, and there's going to be more legislation about potentially an income cap or a different number. We'll know very soon. But they are the individuals who are dependent on this money. It's almost like a 1-2 punch for low income and middle income individuals, because not only are you now having the booster taken away, but you also have a moratorium on evictions expiring. So think about this. On the one hand, you have your what is essentially your only source of sustenance taken away, and then you're facing a home eviction. Never before have we seen this in the history of the United States of America, and I hope, knock on wood, we never see this again. Evictions are widely expected to spike soon. One of the individuals who was interviewed said, in fact, this goes back to the person I mentioned, Tammy Stein. She said, whatever savings I had built up, it all went on rent, or else I'd be living outside. My light and water are about to be cut off. I'm trying to work on keeping them on. I mean, I'm just afraid to go back to Pensacola Beach because I have to make some kind of money. Renters are rapidly losing lifelines across the country, and I know a lot of my subscribers understand this. And the federal government moratorium that I mentioned earlier that protected millions of millions of renters from eviction has expired on Friday, has expired as of a few days ago. The extra $600 a week unemployment booster essentially ended over the weekend as well. And so Congress has yet to agree to an extension, and the August 1st rents are looming as we speak. Now, talk about housing inequality. If this doesn't exaggerate housing inequality, I honestly don't know what does. Really low mortgage rates are providing an extra $100 to $300 of saved monthly housing costs for people who can afford to buy a home right now, and for millions of homeowners who are now refinancing. This was according to Jeff Tucker, an economist at the housing site Zillow. But all of this, he said, is of no help to renters or people who were laid off and who are now completely locked out of the housing market. Just unbelievable. Ladies and gentlemen, cheapest mortgage rates ever, and realtors, economists, and home buyers are saying there's a surge in home purchases, which is driven by three factors. The cheapest mortgage rates ever, that's factor one. Factor two, millennials hitting their 30s and wanting to settle down. And number three, city dwellers, individuals who lived in places like New York City, suddenly wanting more space, less expensive space, essentially moving away from cities. Someone living in a city does not want to be in a crowded elevator, doesn't want to be in a packed subway car. They want office space. They want their kids to run around in a yard. They want that white picket fence, which is resulting in individuals wanting to buy homes that they can now afford because the mortgage rates are low. What an ironic twist in the way the system is working right now. I've always talked about the fact that we need to prepare for a better future, and that's what my channel is all about. And an economist at LendingTree, Tendaya Kapfetse, said it's all about interest rates. It's really giving home buyers a lot of buying power right now. So as you know, in March, the Federal Reserve knocked down the federal funds rate close to zero. And in fact, at the time I'm recording this, it's 0.05%, which is the rate at which banks lend money to each other. This led to a surge in the stock market, and this led to a surge in home buying. Usually, home sales are an indicator of the future of the economy, but in this environment, it's pretty much anything goes at this point. So like I mentioned, the 30-year fixed mortgage, the conforming loan, the Freddie Fannie loan, fell below 3% for the first time since Freddie Fannie started tracking mortgage rates in 1971. Like I mentioned, a 50-year low. So that means a $340,000 home, which would have cost $1,260 a month a year ago when the typical mortgage rate was 3.75%, is today $1,140. According to Susan Watcher, a real estate professor and co-director of the Penn Institute for Urban Research at the University of Pennsylvania, she said America's houses, if you can find one, are on sale literally from unprecedentedly low mortgage rates. Let me know what you think below. Let me know what you think of the inequality in housing below. Once again, my name is Dr. Nitin Chora. Thank you so much for watching. If you learned something new, please click the like button. Please click subscribe. Please enable notifications so you get instant updates from me going forward. I really appreciate you watching. I'll see you in the next episode of Ignition Time.